Yes, sir. Yo, what is going on, guys? Welcome to another video. And guys, how many times do I have to tell you? Like, seriously, when are the Bulls going to learn? Like, how many times are the Bulls going to keep falling for the okie doke? So, most of you guys know I made a video yesterday and I basically titled it, "The Pain is Only Beginning." And don't be fooled by yesterday's insane rally, which we now know was basically just short covering. That's really all it was. Don't be fooled. Nothing in the macro has changed. I always say this every time a gigantic rally happens. You could go back and look at my track record. Every single time this year a gigantic rally has happened, I have made a video saying don't be fooled. And what always ends up happening, the market ends up going back down again. Now, did I expect that the market would go this far down literally the next day? No, I didn't think it'd go down that fast, but I knew it was coming. I mean, seriously, guys, look at what's going on. So to the squirrels in my comments who keep trolling and saying, oh, the market's going up, you're an idiot, you know what you're talking about, oh my God. How about you actually listen and pay attention? You might actually learn something and stop getting caught up in FOMO in these bear market rallies. How many times throughout the year have we talked about this? These are bear market rallies. We're in a bear market. Overall, the trend is bearish. Overall, stocks are going to keep going down until things in the macro improve. What's so hard about that, man? Oh my God, buy the dip. The bull market is bad. Buy the dip. Jesus. All right, man, let's go ahead and get into this. So where we're at right now, as I'm recording this video, it's actually 2:30, so we got 30 minutes till the market actually closes. But as of right now, the S&P is at 3,500. It fell below 3,600 about maybe like an hour or two ago. So yeah, the S&P 500 is down about 2%. Actually, it's down 2%. It's actually down more than 2%. And the NASDAQ is actually down 3%. And we have some very interesting news that came out today, so let's go ahead and get into it. First off, U.S. retail sales were flat in the month of September, missing economists' forecasts and the market expectations of a 0.2% advance as high inflation and rising borrowing costs hit consumer demand. That is what you were seeing. On top of that, we have more drama with the UK. So let's go ahead and talk about that. You have the yield on the Britain's 10-year gilt as well as the 30-year gilt bounce back above a certain resistance level. As a matter of fact, the 10-year gilt bounced back above 4.3% as recent actions by Prime Minister Liz Truss were not enough to boost investors' confidence. Investors are still not confident in Liz Truss' leadership and the whole tax thing going on. So the Prime Minister announced a U-turn. It's not really a full U-turn. It was a partial U-turn because she only announced 18 billion out of the entire like 80 or so billion. So it was a partial U-turn, but here's what happened. She announced a partial U-turn of the government's plan to scrap the planned rise in corporation tax from 19% to 25% next April, which will end up raising $18 billion per year. Truss also made sweeping changes to her cabinet by replacing Kwasi Kwarteng, I hope I'm saying his name right, Kwasi, with Jeremy Hunt as Chancellor of the Exchequer. Meanwhile, the Bank of England's emergency bond buying scheme, which was used to cover pension funds, caught up in the market chaos sparked by the tax cuts announced last month, has ended today, just as we expected. So Monday's going to be very interesting, guys, but I'll talk about that at the end of the video. On top of that, you had U.S. year-ahead consumer inflation views rise for the first time since March, with expectations being that prices will climb 5.1% over the next year, up from 4.7% in September. This is according to a survey from the University of Michigan. Now, I actually saw this in real time. Most of you guys know I work from home on my computer. I actually work in my house. And so I'm able to watch the market, and I literally saw as soon as the news came out, the market did plunge. Like the market didn't like that at all. On top of that, they also see costs rising at an annual rate of 2.9% over the next 5 to 10 years. This is a pickup from 2.7%. So as of now, the market appears to be indicating that problems in the gilt market are not solved, and investors still do not have faith in Liz Truss. And the market is also still digesting the inflation data that we are continuing to get, which, by the way, keeps coming in hotter, which is why I keep telling these delusional bulls the pain is not over. oh, buy the dip. Yeah, okay. I mean, by the way, I did buy the dip. Don't get me wrong. I actually did buy some stocks today, but when you buy, I think the best method you could do at this point is to just nibble. It makes sense to nibble, but I would definitely recommend, I mean, obviously not financial advice, but I would still recommend holding cash. I really do. Do not put all of your cash to work in this environment. You could continuously and slowly put some cash to work at certain points. Like right now, I don't see anything wrong with buying some stocks today. I mean, I bought some Amazon, I bought some Google, I bought some Disney. I don't see an issue with that. But did I put all the money I have into it? No, because I'm very confident that they're probably going to go lower, okay? Now, in other news, guys, we got some breaking freaking news. This news actually came out 10 minutes ago. So it says here, revised disclosure info showed that the investments of Atlanta Fed President Raphael Bostic were traded during U.S. central bank blackout periods, and that many of his financial trades and investments in the past 5 years inadvertently violated the central bank's ethics rules, and he has revised all of his financial disclosures since becoming Atlanta Fed president in 2017. Bostic said investment advisors and money managers had made financial transactions during periods surrounding Fed meetings when members of the Federal Reserve's policy-making committee are not supposed to trade. The advisors also purchased investments that Fed members aren't supposed to own under a set of revised ethics rules that took effect in May. Bostic acknowledges the accidental trades that violated Fed ethics code. However, he says he was unaware of specific trades done on his behalf by third-party money managers. Yeah, freaking right. Fed Chair Jerome Powell has directed the Inspector General to probe Bostic's trading. I don't know how well that's going to go, guys, because for those who don't know, Jerome Powell actually did the same thing. That's what led to this entire scandal. For those who don't know, we actually went through this about a year ago. And what makes it so crazy now is that we're finding out now that basically a year after the original scandal happened, Raphael Bostic is still doing it. Because for those who don't know, Jerome Powell did it. You had 2 other people in the Fed who did it, who actually ended up resigning over this. Like, this really turned into a legit, huge, gigantic scandal. And yeah, the craziest thing about this whole thing is that Raphael Bostic has the audacity to, a year later after this huge scandal broke, still be doing it. Like, holy freaking cow, dude. Now, I see some news coming in that I guess the Nikola founder, the guy who freaking scammed the investors, finally got charged with 3 out of the 4 counts, and he's facing 25 years in prison. That is good to see. Overall, I don't care, but it's good to see at least some of these criminals go to jail. Here we go, though. On the corporate side, here's the important part. Earnings came in today for banks, and JP Morgan, which is the biggest U.S. bank by assets. I'm sure you guys know that. They rose more than 2% today after reporting third quarter results for profit and revenue. That did surprise investors to the upside. They did have a good earnings. Wells Fargo also enjoyed some pretty decent gains as well after their revenue topped estimates. Now, don't forget, guys, we don't have a crazy ton of economic data coming out next week. However, we do have earnings that will be continuing. And then also, I do want to say that Monday, you are going to very closely want to watch the gilt. The gilt is pretty much, in my opinion, going to be a market mover depending on what happens, because as you guys know, today the Bank of England has officially taken away their support. They are no longer intervening and helping out the gilt. So now the question is, how high will the yields go since the government is no longer there anymore to intervene? Well, we are going to find out Monday. So Monday is going to be very interesting. And yeah, stay tuned and continue to pay attention to what's going on in this entire inflation, global recession, drama, freaking stock market world that we're in right now. So anyway, there you guys have it. That'll conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe. And I'll see you guys in the next one.